You cannot run an infinite burn background process on a server that forces a hard reset every 90 days. Translating that to corporate reality, SpaceX wants to colonize Mars, but Wall Street demands a quarterly profit check. The anomaly is survival. Taking an $800 billion aerospace company public should mathematically destroy its core mission by subordinating deep research to immediate yield. Yet, the impending IPO is engineered to do the exact opposite. Look at the raw telemetry. SpaceX is actively facilitating secondary share sales, pushing the private capital pipeline to absolute maximum pressure at an $800 billion valuation. Meanwhile, the internal financial engine is violently asymmetrical. The core aerospace R&D has zero emphasis on short-term earnings. It only burns cash. But Starlink, the satellite internet division, is estimated to generate $10 billion in revenue and $6 billion in EBITDA by 2025. One side builds rockets, the other prints money. The solution is structural containerization, isolating a high-traffic application so it cannot crash the host operating system. The 2026 SpaceX IPO is a misnomer. They are executing a corporate spin-off, splitting Starlink into a separate, publicly traded entity. Starlink acts as the financial decoy. By isolating the cash cow and feeding it to the public markets, leadership permanently shields the infinite burn R&D lab from activist investors who would otherwise demand they stop building Martian architecture and start paying dividends. The precise vector here is a controlled liquidity event, a transaction that finally lets early investors and employees convert their paper equity into actual cash. This transfers the pressure out of the system. The gains go directly to talent retention. Elite engineers who have grinded for a decade get their payout through Starlink stock, while Wall Street gets the high-yield telecom asset it craves. The only losers are the institutional investors who believe buying into the spin-off gives them voting power over the rockets. It does not. The structural implication is that this IPO is not a capital raise designed to fund the colonization of Mars. It is a containment perimeter built to protect the Mars mission from capitalism. If you want to retain top-tier engineering talent, you have to let them get rich. But if you let Wall Street price your deep tech research, they will gut it for immediate margin. The Starlink spin-off is simply the toll paid to the market to leave the core mission alone. The public market is a garbage collector, a memory management protocol highly efficient at finding and reallocating idle resources, but fatal to any process that takes too long to execute. Wall Street thinks they are finally buying a ticket to Mars, but they are just buying the router that pays for it. See you next time.